All right, welcome back to another episode of the Black Bullion Show. So today's the day we should be hearing from Jay Powell about the possibility of adjustable inflation. Now, we'll see, how that impacts gold prices. But in this video, I wanted to take a macro look at things while also doing a quick technical analysis to see how traders have been moving in the market. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Now, we have a new one here from Kitco entitled Gold Price to Test This Key Level Before Rallying Towards $2,700, says Credit Suisse. Now, $2,700 is a high number, so let's dig into the details a bit here. So let's get started. The gold rally is taking a breather with buyers and sellers playing the range game as gold bounces between $1,920 and $2,000 an ounce for the past 2 weeks. Going forward, the new all-time highs are unlikely until gold tests this level on the downside, Credit Suisse said in its latest report. Gold continues its expected consolidation following the move to our base case objective of $2,075 or $2,080. Although we continue to see the core long-term trend higher, reinforced by falling U.S. real yields and a falling US dollar, we suspect there is a scope for a more protracted consolidation phase to unfold first, Credit Suisse strategist wrote on Wednesday. The key trading range to watch is $1,867 to $1,837, the strategist pointed out. At present, our bias remains for a cluster of supports at 1867, 1837 to ideally hold further weakness, which includes the 23.6% retracement on the rally from the 2018 low. Should weakness extend, we would see scope for a deeper setback to $1,765, potentially 1726, they said. Credit Suisse's projections of a longer pause in the rally is backed up by its overview of the past bull runs. It is worth noting that monthly RSI has reached its extreme levels seen in 2006 and 2008, adding weight to the view for a lengthier pause in the bull trend. Indeed, in the 2001-2011 bull market, the two major consolidation phases, 2006-2007 and 2008-2009, lasted 16 and 18 months respectively. A similar length of consolidation at this juncture, though, is not our base case for now, the strategist wrote. However, once the consolidation phase is over, gold will be ready for more gains, including a climb towards $2,700 an ounce, Credit Suisse stated. So Credit Suisse is seeing more blood in the streets basically before we rally higher to this 2,700 number. But guys, let's take a quick look at some indicators to see where traders are, or what traders are up to right now in the market. So what we're going to do is we are going to use GLD actually, as it's one of the largest ETFs representing gold. And we're going to set a year-to-date range on this once it is done doing its reload. So we're going to set a year-to-date range on this, and we're going to add some indicators here. So just waiting for it. All right, so let's do a year-to-date. And let's also get rid of the simple moving average, and let's put in the Bollinger Bands, and let's keep the MACD, let's keep the volume, and let's put in the RSI, and And just pretty much like the Kitco article said, gold is taking a bit of a breather right now, as you can see from this August 11th period, or really starting a little bit further back when we hit that peak at August 6th, as I keep mentioning, we start to see a trend going downward. And again, we're kind of in this consolidation phase here. But we are taking a bit of a breather, and you can really see this as gold is, the gold price is pretty much either at this middle band here in the Bollinger Bands, or it's in between the middle and the lower band. In addition to that, you can also see that the volume has started to trend downward along with the price. Here you have the MACD, and with the MACD, the histogram is in now negative territory, as you can see here. And the RSI is pretty much firmly planted in this middle range in the 50s, every now and then edging up to the 60s here, but pretty much in the 50s. The only sign of life that I'm seeing right now pretty much exists on August 26th, where we're starting to see an uptick in the RSI, uptick towards 0 in the histogram, uptick here in volume, matching an uptick in price for GLD, and the price is also starting to approach the middle line once again. But I'm not 100% confident here because things could change. I'll start to feel more comfortable once we start to see much more of a continued pattern of this uptrend with these indicators. But guys, let me know what you think about all of this. Now, I've recorded this episode before the Jay Powell speech, so whatever comes from that, we'll see how it has impacted prices. Also, guys, I just want to mention that I created a Black Bullion Facebook page. So if you're on Facebook, I left a link in the description below. So click that link and give the page a like, and I'll be posting these videos there as well. So, all right, guys, thanks again for watching. Let me know what your projections are for gold in the coming days, or even after the Jay Powell speech for the coming days. Now, I don't know what the what the outcome will be with this adjustable inflation here that he could be mentioning, but to me, it would be a boon for gold and silver, given the fact that inflation will impact negative real rates. All right, guys, thanks again for watching. Have a good one. It's Black Bullion.